So last month in May, the Sydney property market was up 1.8%. Over the last 3 months, it's been up 4.5%, and many experts are predicting overall across the year that the Sydney property market will be up a whopping 10%. A lot of people thought that high interest rates would mean that, markets like Sydney and Melbourne, which are traditionally very affected by interest rate changes, were going to be very stagnant or even drop over the coming years. And the market is actually doing the opposite. It's actually starting to creep up a little bit and it's gaining momentum. It hasn't just been 1 month, it's actually been multiple months in a row that property prices are actually creeping up and up and up. So in this video, we're going to go over what's happening with the Sydney property market right now and what are the major factors that are going to affect what happens to prices over the next 1 to 2 years. And once we talk about those factors, I'm going to talk about what I think is going to happen next. And if you're looking to buy a house in Sydney over the next 1 to 2 years, what can you potentially expect based on the data that's coming out at the moment? And as always, if you like the video, please give it a like. It helps it reach more people. And if you want to subscribe. And let me know in the comments below, what do you think is going to happen with the Sydney property market? Do you reckon this is just a dead cat bounce? Do you reckon it's just a false bit of hope before it actually starts to sink? Or do you think the Sydney property market actually is going to go on another run? So a lot of media people are calling this a perfect storm. So you'll see that phrase mentioned so much in the media at the moment because they're basically saying that a bunch of different factors that typically do not coincide are seemingly coinciding. When we are expecting property prices to go down in Sydney, they're actually starting to go up. A lot of people thought that rate rises would kill the Sydney property market for now, and the opposite is kind of happening. So a lot of people are scratching their head wondering, well, what is actually going on and what can we expect over the next 24 months? The CoreLogic home prices indices actually indicating that across the 5 main capital cities that they have all lifted by 0.7% in April 2023. And Sydney was leading the charge for that with an increase of 1.3%. And more recently, it's gone up by 1.8%. The growth has been quite large quite recently. A lot of clearance rates in Sydney are relatively high at the moment, at least for now. And a lot of people are wondering, well, what's going to happen next? So one of the major factors in terms of what we think is going to affect property prices is net migration. So typically, the historical average is around 230-ish thousand people per year in terms of net migration. So, people coming back versus people going, netted out. What we're looking at right now is probably around 350 to 400,000 people that they are expecting for 22 to 23. And potentially, a lot of people are saying that it's going to be around 700,000 that they expect to come over the next 2 years. As you can imagine, that is quite a bit more than usual. Some people are saying that that is a temporary factor because it's a bit of a hangover from COVID, and that will revert back to more long-term averages quite soon. And the forecast of 400,000 people coming in 22 to 23 is based on the budget papers. Their own prediction for 23 to 24 was around 260,000, so that is a lot less. But there are some former people that used to work at the Australian Bureau of Statistics that think, no, I actually think it's going to be much, much higher. Whether that plays out remains to be seen. Either way, there's going to be a lot of people coming here in the next 1 to 2 years. And most of these numbers are going to be made up by skilled temporary visa holders, working holiday makers, and overseas students. One of the questions that I was thinking about was how many of those people actually are going to buy a house, whether they want to buy a house or even if they can buy a house. Out of all those hundreds of thousands of people coming, I wouldn't imagine that all of them are going to buy a house, and then there's going to be a bunch that couldn't if they wanted to. So I'm not sure how big of an impact. I've heard many buyers agents and property experts say that they think that the migration factor, it's been overstated as an impact in terms of driving up house prices. It's kind of above my pay grade, but it is something to consider. It's something that a lot of people are saying is a major factor, so it is what it is. The second factor is that there's less new dwellings being built. ABS data shows that from December 2022 to the previous quarter, the same time the previous year, is that new private sector housing is down by about 15.3%. So compared to 18 months ago, there's significantly less homes being started. Daniel Rossi, the head of the ABS Construction Statistics Department, he said that the approvals for new private sector homes dropped by 13.8%, which was the 5th consecutive drop, and is one of the lowest numbers that they've seen since around 2012. So quite over 10 years, they haven't seen this low a number of new private sector homes being approved. And across Australia, total new dwellings approved dropped by a whopping 49% in New South Wales and 38% in Victoria. So quite large drops in how many buildings are being approved to be built. And before COVID, if you go on the Planning New South Wales website, there was actually quite a lot of homes that were being built pre-2019. So before all the COVID shenanigans kicked off, there was quite a large number of homes being built. In Sydney in 2018 to 2019, there was over 42,000 homes built, which is the highest ever recorded for a single year. Half of those homes have probably fallen over given the quality of Sydney construction, but a lot of this happened because the economy was good, interest rates were low, building approvals were high. So that was a perfect storm of itself where lots of houses were easily built. Now, the problem was that shortly after, housing approvals and construction really dropped quite a bit. And in 2020 to 2021, it actually dropped to around 29,000. And it doesn't look like it's going to get any better anytime soon, with basically higher construction costs, higher interest rates, greater economic uncertainty, less building approvals, all around, like pretty much almost all the factors that would lead to houses being made, it's going against that. The next factor is that there's not a lot of stock on the market. So out of the houses that are already built, nobody's really listing them. There's a lot less listings overall that are happening. So you've got a certain number of people trying to fight over a small number of properties. And normally when property prices start to dip, interest rates are starting to creep up. If you look back to 6 to 9 months ago, all the signs were looking like property prices were going to come back down to earth and keep sort of declining. So whenever that's happening, some people get a bit hesitant to list their home. Maybe they think it's actually worth, more like what it was a few months prior. So they don't want to feel like they're taking a loss. Others want to just jump out before everything goes to crap. But many people thought that their house is actually worth more and, in a soft market, I don't want to sell and crystallize a loss potentially by selling when, I think the market's going to crap and they think it probably will correct later. Across all the capital cities, in May, one weekend, there was about 1,700 properties that were listed for auction. And if you compare that to the same time last year, it was actually 2,700. So 1,000 less homes going up for auction only a year apart at the same time of year. So you can kind of get a bit of an idea of how many less homes are being listed and put out there on the market. So basically what ends up happening is you have more people coming here, less stock going out in the market, less new homes coming out in the market. And this is basically the perfect storm that they're talking about. And I'll show a graph on screen by Shane Oliver, who's an economist with AMP, and he kind of charts this quite beautifully. You kind of see the how things have fluctuated and how all these things coinciding at the same time are leading to house prices not going down, not even going sideways, but in Sydney anyway, and many other parts of the country even right now, which is quite rare. It's quite a broad market recovery, but specifically in Sydney, it's going quite well right now, which is definitely not what I would expect at the start of this year. So what does all this mean? Well, I guess if you are looking to buy a property in Sydney, people have been saying this for years, that it's, Sydney property is too expensive, but it just keeps going up and up and up. And this is typically what people say before a bubble pops. So who knows how things will play out in the future. However, the deck is quite stacked against someone trying to get into the property market right now. Whether that maintains is anybody's guess. I personally think that I don't see any, this is my uneducated opinion, but I don't see many reasons why property markets will drop significantly anytime soon. There's going to be no large amounts of new houses in Sydney anytime soon. People aren't approving houses, they're not building houses. People that want to build houses, they can't, people can't get loans. There's so many different factors that are leading houses to not come on the market for sale. So what happens from here? Well, most of the factors lead to Sydney house prices at least going sideways, if not creeping upwards. Do I think it's going to be a boom again? No. Maybe I'll be proven wrong. There's low supply from existing homes. People just aren't listing their homes as much as they have been in the past. There's a low number of building approvals, low number of building completions. Cost of construction is still super high. Some areas have subsided, but overall, people and builders specifically are probably pricing things more accurately than ever and allowing a lot more buffer than ever. They don't want to do low profit projects, and who could blame them? And overall, I don't see a great number of reasons why Sydney house prices can go down, at least for now. Maybe in the future, maybe after 24 months, things really start to turn. The economy is on shaky footing. It's kind of been a very stressful last 2-3 years. I'm lucky I've already got my house. However, I do feel for people that are trying to get a house, because that was me a year ago. And I didn't even have a very long house search, but it did my head in. Even that brief time looking for a house, the stress and the headspace that people have trying to find a house, and the disappointment and all that sort of stuff, it's not very, very fun. So that's my thoughts. Let me know what you think in the comments. Do you think house prices are going to go up, sideways, or maybe gradually increase? Let me know below. And if you like the video, please give a like, and I'll see you in the next video. Cheers.